Technical analysis alone will not make you a profitable trader. Please don't get me wrong. Understanding price, understanding your trend, your swing structure, when to enter the market, when to exit, and all of those concepts that technical analysis teaches, they are very, very important. But they will not make you a profitable trader if you don't understand risk management. Risk management gives you the opportunity to try again, right? It keeps you in the game and gives you the opportunity to become profitable. If you understand technical analysis and you don't have the capital to trade, then of what use is your technical analysis skill, right? This is why risk management is very important. So the main goal of technical analysis, or the primary goal, is to protect your capital and ensure sustainable profitability by maximizing potential losses and maximizing potential gains, right? Emphasis is minimizing potential losses and maximizing potential gains, right? So guys, if you haven't subscribed to the channel, please go ahead and subscribe. On this channel, I bring value, right, that helps you become a profitable trader. So if you like videos like this that help you level up, please click on the subscribe button and also click on the like button as well, just to help the channel grow, right? Now, why is risk management so important? Forex market or crypto market or stock market, right? They are very, very volatile. Even experienced traders, right? Myself, I take losses every time. I'll not come here to, act like I don't take losses, right? I take losses, right? But one thing is my wins outweighs my losses, right? So that's why I remain profitable and I manage my risk properly. So I am a profitable trader, right? So experienced traders can also experience losses as well, right? Risk management helps traders navigate these uncertainties and make informed decisions. Of a truth, we don't actually know what the market is going to happen. Even the best looking setup can still give you a stop loss, right? This is why we try to, maintain our risk to ensure that we have the capital to always try again. So in this video, I'm going to discuss this basic concept or this basic risk management strategy with you guys. The number one thing we'll be looking at here is risk percentage, right? Now, what is your risk percentage? You need, before you actually, now this concept we are going to be explaining, all these strategies, right? You need to figure out all of these things before you actually start a trade, right? Before you start a trade, you need to understand, we need to have all of these things planned out first, right? If you try to, plan all of these things when you're already in a trade, you are going to end up with so much emotional, instability. You're going to end up with so much emotional rush. At the end of the day, you might, make the wrong decision, right? And that is what the market wants to get out of you. The market wants to become emotional. The market wants you to be emotional so that you can make, uninformed decision. This is why you need to have your risk management strategy well planned out before you take any trade at all, right? So the first thing you want to do is to determine your risk percentage, right? Now, let's say you have a $10,000 account, right? Let's say you have it. Some of you are trading prop firms here. So let's say you have a $10,000 account, right? You have to determine the risk you want to take for that trade, right? You have to know the percentage you want to be risking per trade. So let's say you're risking 1%. Let's say you're risking 1% per trade. So let me just say you're risking 1%, right, per trade. Let me just add it up here that you're risking just 1% of your capital per trade, right? Now, if you're risking 1% of a $10,000 account, that's like $100 per each trade, right? Now, if you having figured that $100 is your risk, you will ensure that you maintain this $100 across all your trades, right? You need to maintain same risk percentage across all your trades. If you are not stable in your trades, let's say, for example, you take a trade today, you risk 2%, you end up in a loss. You take the next trade, you risk 1%, right? You end up winning that trade, right? Even if you get 1:3, even if you get three times the money you risk, which is 1%, right? You're going to end up with three $300, right? You're going to end up with $300. So if you had risked at 1% initially, right, instead of the 2%, right, you would have end up with a net profit of $200. But because of that loss you took initially, you're going to end up with a net profit of $100. So you can see why you need to maintain consistent risk. You have to maintain consistent risk, consistent rewards as well. So the next thing we'll talk about here is the lot sizing, right? Lot sizing. This is very, very important. So I'm just going to pull up. This involves a little bit of calculation, but don't be scared. I know some of you don't like maths. Yes. So this is how lot sizing is, right? Now we have three major type of lot sizing. The number one is a micro lot, number two is a mini lot, and number three is a standard lot size, right? Now the first category here, which is a mini lot, is 0.01. Now 0.01 lot size here, which is a lot size, right, is equals to 10 cents, right? And 0.03 lot size is equals to 30 cents per pips, right? Per pips. Each of these is per pips, right? And then the 0.09 lot size is equals to 90 cents, right? So it means if you're using 0.09 lot size or 0.01 lot size, you're probably making, let's say you use this one, right? 1:3, you probably end up with, 30 cents, right? Even if you get 1:3, when you take a trade with this type of lot size, right? So the smaller your lot size, the smaller the money you make as well. But then you have to consider your account. So don't think you want to increase your lot size carelessly, right? Just pay attention. At the end of this video, you're going to understand perfectly, right? And this second category, when you risk 0.1 lot size, it means per pips, right? Per pips, you're either losing $1 or you're making $1 profit, right? And then the standard lot size as well. When you risk one lot size, right, one lot size per trade, it means you are actually, risking $10 per pips, either in profit or in loss, right? And if you get to a point where it becomes so when you make so much profit from trading, where you start using 100 lot size, it means per pips you'll be losing or gaining $1,000 per pips. Right? Now, how do you calculate your lot size? How do you calculate your lot size? That's what I'm just going to show you guys quickly. So let's go to the chart, all right? Let's go to chart so that you can have a better understanding. So let's say this is our chart. Let's say we want to sell these markets. Let's say, for example, this is just an instant, right? This is not a real-time analysis, right? So let's say I'm selling this market here. Let's say let's say I cover this low here, right? And then let's say this is 20. You can see here that this is 20 pips, right? You can see here that this, just look carefully at the top. You're going to see stop 0.0000, and then you're going to see 20.1, right? So it means this 20 you're seeing here, it means my stop loss is 20 pips, right? It means my stop loss is 20 pips. Now, so how do I calculate my loss size? Remember, we are using, we are using $10,000 account, right? As our starting balance, right? And our risk, since we are risking just 1% of our account, our risk is $100, right? So how do I get my lot size with this type of pips that I have here? So what you're going to do is you're going to multiply this 20, right, times any of this lot size here, right? Times any of this lot size here, right? And it will give you what you're looking for. Now, since we are risking 100%, since we are risking $100, what we are going to do is we are going to multiply what? We're going to multiply 0.5, right? We're going to multiply 0.5, right? 0.5 lot size is going to give us $5. Now we're going to multiply 5 times 20, 0.5, which is $5 now, right? Times 20. So since this is our stop loss, right? Our stop loss is 20. Our stop loss is 20, and then our loss size is 0.5. It means when we use 0.5 as our lot size for this trade, if the trade decides to go against us, right? If the trade go against us, we are only going to lose $100. We are going to lose $100, right? Now let me just recap. when you're calculating your lot size, right? Now, all of these things that I did here, it doesn't mean these are the only available lot size. No, this 0.1 is 0.1, 0.2, 0.3, 0.4, 0.5, but when you get to 0.9, 0.09, the next thing you're going to have is 0.1, right? Then 0.1, 0.2, 0.3, all the way to 0.9, right? And then also when you get to 0.9, the next thing you have is 1, right? 1, 2, 3, 4 down to infinity, right? That's why I say 1 to infinity here, right? Just the way I highlighted in here. So don't think these are the only thing you're going to be working with. No, right? Now in this case, let's say for example, let's say this lot size is actually 10, right? Let's say it's 10, and you want to like get, since we are working with our $100 risk, what you want to do is you want to multiply 0 point. Now you want to multiply what? 1 times, yes, 1 times 10, right? 1 times 10, right? And then that will give us, sorry, our lot size here is 1, right? So that means we are risking $10. So it's 10 times 10, sorry. You multiply 10 times 10. Remember when we did this, we multiply 5 times 20, right? So here we are using one lot size. So multiply 10 times 10, and that will give us 100, right? So it means if this our stop loss is 10 pips, right? 10 pips, we'll be using one lot size for this trade, right? So that's it about lot size. And you can just, if you don't understand it, listen to the video, watch the video over and over again until you get it, right? The next thing we'll talk about here is your risk to reward, right? Risk to reward. Now, the risk to reward is the amount you're willing to risk plus the amount you get in return, right? Now, the reward you get for now we've established that our risk is 1%, right? Now, what will be our reward for risking this 1%, right? Now, my standard risk to reward is 1:3, right? I'm risking 1 to get 3, right? This is my standard risk to reward. 1 to get 3, right? This is my standard risk to reward, right? So it means anytime I risk 1, I get, anytime I risk 1 and I win that trade, I get 3, right? Now, anytime I also risk 1 and I lose just 1, right? So it means, let's say, for example, now I take 10 trades, I win 10 trades. Sorry, let's say I take 10 trades, I, lose 5 and I win 5, right? That will be 5 times 3 for me, right? It will be 5 times, five, that's 3 times 5 now, right? 3 times 5. Because every time I win, I get 3, right? And I win 5, I won 5. So that's 5 times 3. And that will give me 15. And then every time I lose, I lost 1, right? So that will be then 1 times 1 times 5, right? 1 times 5. And that will be 5, right? So at the end of the day, out of the 10 trade, this is then 15, right? This is 15. This is 15, and then this is equal to what? This is equal to 5, right? So now plus minus, this will then be what? 15 minus, right? 15 minus 5, right? Then equal to 10, equal to 10. So that means after taking 10 trades, right? Losing 5 and winning 5, I'll be up 10% in profit, right? 10% in profit. Let me take this out. So it means I'll be now 10% of our 10% of our $10,000 account. That will be 1,000, right? So it means after taking 10, risking the same $100 for each of the trades, and taking 10 trades, winning 5 and losing 5. At the end of the day, I'll be left with what? I'll be left with what? I'll have $1,000 as my I have $1,000 as my net profit after the losses, right? This will be my profit at the end of the day. So you can see how risk management works, right? So this is what risk to reward is all about. And then the last thing here is what is the take profit and the stop loss order, right? Now you don't take any trade without setting your stop loss and your take profit order. Just like this example I give us here, right? On this trade, now how do you know where your stop loss is? If you look to the top, to the right of your screen or your PC, whenever you click on this sell position, right? Just highlight it. When you highlight it, It's going to give you all the parameters, right? Then you look to the, just look to the right, just look to your right, where you have all of these prices displayed for you. Let me use this tool. Let me use this demonstration tool, right? Where you have all these prices displayed for you, right? Where you have all these prices displayed for you, just look, once you highlight this sell position, you're going to see the numbers highlighted as well, right? So see the first, this 14397 is our stop loss, right? And then this 14296, this 144296 is our entry, right? That's when we are entering the market. And then this, 143944 is our take profit, right? So what you want to do is take these parameters, go to your MT5 or your MT4 or whatever platform you're using, and then impute these values, right? Impute these values based on your calculation. Likewise, when you're entering a buy position, same thing, right? All you need to do is to just click on your buy position, and you're going to see all the parameters, the numbers highlighted for you at this right side of your screen, right? Now, if this lot size is actually difficult for you, if calculating lot size is difficult for you and you want to, maybe you want to you can decide to use lot size calculator, right? You can use lot size calculator, and choose any of this platform, right? My FS book. Now, what you want to do is when you're using a lot size calculator, oh, sorry about this. Pause this. Sorry about continue to my FX. All right. So if you're using a loss high calculator, what you want to do is the first thing you want to do is select the pair you're trading, right? In this case, we are trading this is USD card, right? So let's say we select USD card. We're going to type USD card here, USD card. We select it, and then the currency is in dollars, right? USD. Then the account size, remember we are using the $10,000 account, right? So you're going to type $10,000, and the amount we are risking 1%, right? And then our stop loss for that trade, remember we started with that 20 pips, right? So our stop loss is 20 pips. And then what are we going to do? We're going to go ahead and click on calculate. Now, when we click on calculate, now look at the lot size it gives us, right? 0.71. Now let's use Euro USD, for example. Euro USD. The same thing. Now let's click on it. You're going to see that we have 0.5, right? Now, so one thing I need to explain quickly is that, this lot size that I just the manual lot size calculation is for, USD pairs, right? So you can see from the calculation we did the other time where we multiplied 20 times 5, right? And then it gave us 100, right? That's the same, and that 5, remember we said the 5 is 0.5 lot size. That's the same thing we got here as well, right? So you can see, right? So guys, if you found value in this video, please go ahead and subscribe to the channel. I'm going to leave a quiz in the comment section. Attempt it. So just to test your understanding of the concept we've discussed. All right. So guys, see you in the next one. Peace.